I have sold a lot of deep out of the money call options on Oklo. If the price pulls back a little bit, I'll buy some of those options back maybe. But for the most part, I took sort of a balanced approach. I don't believe in fairy tales, even if they come true, because even if they come true, they may be temporary. So never forget that Cinderella can always turn back into a pumpkin. So the stock that is a masterpiece and a superstar right now could be a loser, a dwarf, and a dog next year. So don't get caught up in what the stock has done as an indicator of future performance. If you want my opinion as to whether the stock is overvalued, I'm going to say it probably is. So perhaps selling some call options might protect you. Buying some put options might protect you. Just positioning yourself and sort of preparing to possibly be disappointed is a good way to kind of keep it safe. Because 135 is a shocker to me. If you told me 2 weeks ago that it was going to hit 135, I wouldn't have believed you. That's a ridiculously high price movement. But hey, since it's my friends are making money, you're my friends. I that makes me really happy. So be really careful about that as you move forward. All right. So one more thing I want to mention is next Tuesday. I know I talked to a woman in our one of our mastermind sessions, and she told me that she was struggling with investing because she has this anxiety and she's kind of afraid to um, to make her move. So what I did was I called in my wife, who's a licensed therapist and a full professor of social work, and she's certified in trauma. And so what she's going to do is she's going to do a healing training on Tuesday, so you can heal financially, so you can go ahead and make the moves you have to make, so you can accept the risk and know that the stock market is going to have ups and downs. But if you hold the course, that's how you build the wealth. So she's going to do that Tuesday at noon in the Stock Market Investors Club. If you want to do a free trial in the club, you can look up, you can go to drboycestockmarket.com. That's drboycestockmarket.com, and you can join us on Tuesday. And we have some other things coming up as well. And then of course we have things for your kids, financial flashcards and workbooks for children. So if you go to financialflashcards.com, we've got flashcards for crypto, flashcards for stock options, flashcards for stock market investing, stock flashcards for real estate. So feel free to go to financialflashcards.com. Now Oliver's asking me about HUT, Oklo, and INQ. IONQ, I think I own all of those. I just bought a big position in HUT. HUT's gone up a lot too. I think HUT's up maybe 50, 60% in the last couple of months. What would be a good dead cat bounce price? That's a good question, Shamir. I would say that it depends on how you feel. I mean, there is no definably clear dead cat bounce price. It's really how you feel about sort of your long-term thesis. So I have a long-term thesis that nuclear power is going to be there's going to be a shortage, and that I want to be involved, and I'm willing to ride along and deal with whatever comes with it. So that means that if there are stocks that fit my thesis, then if those prices go down, I dollar cost average. I buy more when the price goes down. That was how my cannabis investment turned from extremely negative to positive, because as the price went down, I just kept bouncing. I kept buying because my thesis held true. And so now that loss became a gain because it drops all the way from 20 something dollars a share down to $1.50. Then it goes up, it doubles. It goes to 3.50, $4 a share. And I made a ton of money off that. So the money I made up for the money I lost when I overpaid for it. Do you understand?